Okay, what have you been looking at, Steve, in your quick earnings?
My first two I looked at was Visa and Mastercard. They reported earlier in the week. They were very, very impressive earnings. I'll start with Visa. So they did 7.3 billion in revenue, up just 19%. Net income was at 3.4 billion, up 32%. That's a 47% net income margin. That was up 488 basis points. They generated 5 billion in free cash flow, 69% free cash flow margin. Payments volume was up 12% to 2.9 trillion. They were guiding for between 15 and 20% revenue growth. Visa's a monster, Steve. Mastercard, they beat on revenue, so consensus was 5.2 billion. They did nearly 5.5. Operating income, they were looking for just under 3 billion. They did nearly 3.2. Operating margin, they were looking for 55.6. They did 58. Gross dollar volume for them, they were looking for 2.52 trillion, and they did 2.054 trillion. So that was another beat, but only slightly. Both of these companies reporting big jumps in payment volumes, which is not something you would commonly associate with an impending recession. But inflation is around that kind of figure, 12% growth. For quite a few items that I suppose you would be paying with your Visa and your Mastercard, but very impressive businesses, Steve.
Own either of these?
I own neither of them. No, I owned Mastercard for quite a while, and I'm still sort of sat there thinking, why on earth did I sell this, and why did I sell it to buy Visa?
Paul owns Visa, I think. I owned Mastercard a little while ago. While you were saying that, I was just working my way through the cards in my card holder that I use to pay for things, and I have here 4 Mastercards, although it's arguably some double counting because 2 of them are Monzo ones, one's a joint account. So 3 or 4, you choose. Mastercards, 1 Visa and 1 Amex. But the point I'm kind of making here is that I was saying before, if you want to know what's going on with big tech, go have a look at Microsoft and Apple. If you want to know what's going on with consumer spending, have a look at Visa and Mastercard, because basically, especially now since kind of a during or post-COVID kind of world, they have their hand on basically everything that's flowing through stuff. And they will know whether there's more money flowing through, less money flowing through. You get the general idea. If you want to have a look at how consumer spending is going and use that to inform your view about other things you might buy, or just buy these if you want. But the thought is that there's information there that is useful to you more than just about Visa and Mastercard. It's tempting to look at these, as I often do, although I haven't recently, and think, gosh, those are great businesses, but they're kind of expensive. I would be surprised if they're not both around sort of 30-ish times earnings or so, which is not cheap. And then kind of give up on that a little bit. But there is definitely stuff to be had from looking at these guys from an earnings perspective, even if you don't own the stock and don't anticipate owning them, like I sort of don't at the moment. Steve, I get the impression you're currently looking at the PE and you're now going to tell me it's 24.
No, I thought it was more than that, to be honest. It's the PE of Visa is actually 35, but when you sat looking at that sort of free cash flow conversion, 69% margin of free cash flow is, that's a business that you want to be paying a premium, and you've really got to look and think to yourself, and like most companies have free cash flow conversion below 20, and they're at nearly 70. So is a 35 PE too expensive? That's the question you've got to answer yourself. But I mean, these are premium businesses, and I think the problem with them during the pandemic was the rise of crypto, and it felt like an unstoppable force that could potentially disrupt these businesses. And since there's been that massive fall back in sort of the popularity of crypto, I think a lot of people have been burnt by it. Visa and Mastercard look really, really strong again, and anybody who picked these up at COVID lows and has held them on, I think you've got a fantastic stock there.
Yeah, so Buffett said in an interview at some point, you can see how carefully I reference these things when they just occurred to me, that basically he's made his kind of money by betting against disruption, which isn't to say short in Cathie Wood stocks, it's to say thinking that actually the time it takes for things like Visa, like Mastercard, and in general like rails and so on and so forth to be disrupted will be longer than you think, and there will be plenty of money coming out of those things because everyone's interested in the new shiny thing. And there are times when those stocks really, really boom, like they did during COVID and so on, when the world looked like a really violently different place, and some things were looking like they were basically dead. Buffett's general idea is that, well, look, the pace of change is usually slower than you think, and sometimes that creates kind of opportunities in things that people are expecting to be disrupted and thinking, oh, it's basically the end of the road for this company. Visa and Mastercard is not without challenge by any means, but those are the kind of things where you might think, yeah, are they really being disrupted at the rate that they once thought they were? Turns out they're kind of resilient. And actually, I think both yours and my thought on Mastercard at some point was, I just looked through my kind of wallet here, and I'm with quite a few challenger banks and so on. They're probably a little bit perhaps more cooperative, I guess, with new trends and quote-unquote disruption than Visa are.
Yeah, that's the idea. So in the UK, Mastercard were very cooperative with the fintech banks, which is probably why you've got a few of them in your wallet. Chase as well went with Mastercard when they came over. I think Mastercard they just have the better tools for startup banks. I think they're a little bit more sort of tech focused, where and ready to integrate and help out with these small banks. Whereas Visa, I mean, you can see they're almost double the size in terms of payment volume. Probably think that these smaller banks aren't going to make too much of a dent. We'll let Mastercard keep busy doing that, and we'll just chase the big customers.
So yeah, Mastercard and Visa are a couple of interesting ones to keep an eye on for reasons not necessarily to do with the company. That's why we kind of follow these for earnings purposes.